Okay, if you had investments before the 10 years, I guess they mean the 10-year period in Israel after which you will be taxed. So if you had investments in IRAs, I guess a U.S. retirement account, 401k, etc., how do Israeli taxes affect the American Israeli after the 10-year tax exempt period? Also, is it true that if you don't make $10,000 a month, you don't need to report? Uh, I'll just answer the second one first before I hand it over to you, Ariel, because it's a common misunderstanding that I've seen in other spaces as well. They believe that if you make below $10,000 a month or maybe 100 grand a year, you don't need to do U.S. tax returns, and that's incorrect. You may not need to pay taxes because of tax credits or the foreign earned income exclusion, but a tax return is still due. And I think in one of the slides I had it, if you make as little as $5, assuming that you file separately, the different thresholds or whatever. But the point is, $5 could be the threshold for filing a tax return. So, from a US perspective, please do seek professional advice on that. Ariel, do you want to comment on the rest?
Yes, I want just to explain the 10 years mechanism. Yeah. The 10 mechanism works like that. If you are in the US before, you were outside of Israel and then you come to Israel, if it's a ordinary income or regular income, let's call it that way, it's exempt only for these 10 years. If it's a salary, if it's a pension that you are receiving, if it's a business income, if it's a rental income, this is exempt only for the 10 years. What is exempt after the 10 years is, for example, capital gains. If you sell a real estate or sell a company or anything like that after the period of 10 years, it will be also partly exempt from the day that you buy the share or the real estate, and until the day of the end of the 10 years, it will be the period of exemption, and the rest of the period will be taxable period. So, for example, if you buy an asset, you were 5 years in the US, and then you came to Israel, another 10 years, and 2 years after that you're selling. So you held the asset for 17 years. Out of it, 15 out of 17 will be exempt. 2 out of 17 will be taxed in Israel. So with respect to this question, the question is about IRA. So it means that it will be an ordinary income, meaning that after the 10 years, it will start to be fully taxed in Israel. Not fully in the sense that, as I said before, 35% should be exempt, but this is not because you were in the 10 years period, but just on a regular Israeli tax law.
Okay.
Please subscribe, like, share, and comment below. Our books and upcoming event are available at htj.tax. Email us at help@htj.tax to engage us, to advise on international tax or business matters.